Hi everyone, I am Shruti and welcome back to G2 Finance Tech's weekly market update. Your weekly dive into global markets with sharp insights and a grounded outlook. This week, investors found some reasons to cheer. Markets broadly rallied as trade tensions took a step back and earnings season delivered a few surprises. But let's not be too quick to celebrate. Growth cracks are still visible. Let us get into the details. United States. Rally mode but growth worries linger. US equities closed higher with the S&P 500 recording its second straight weekly gain and the Nasdaq jumping 3.4%, fueled by strong earnings from big tech and fading trade tensions. President Trump eased up on auto tariffs and officials hinted that a major trade deal might be close. Still, economic signals were mixed. Job openings dropped to a 7-month low and ADP private payrolls missed estimates. Yet, Friday brought a surprise upside. The US added 177,000 jobs in April, more than expected. GDP, though, wasn't as rosy. Quarter 1 data showed a 0.3% contraction, the first decline in 3 years. Meanwhile, the Fed's preferred inflation gauge stayed flat, even as consumer spending rose 0.7%. Treasury yields moved higher after Friday's jobs data, and gold remained firm around $3,300 as investors kept their hedge on. Europe. Growth rebounds but inflation stays sticky. In Europe, markets were in celebration mode. The Stoxx 600 rose 3.4%, led by Germany and Italy. Economic growth doubled in the Eurozone to 0.4% in quarter 1. Spain and Italy beat forecast, while France and Germany showed positive momentum. But inflation remains pesky. Headline CPI held at 2.2% and the core inflation ticked up to 2.7%. Consumer and business confidence, however, took a hit post-tariff announcements. In the UK, home prices slipped and business sentiment fell sharply on fears of rising employment costs and US trade impact. Japan. A pause on policy and in growth. Japanese stocks posted strong gains with the Nikkei up 3.15% as the Bank of Japan held rates steady and trimmed its growth and inflation outlook. Governor Ueda cited global uncertainties, especially US tariffs, as reasons for caution. Domestic data remained soft with weak manufacturing activity and sluggish retail sales. Still, wage pressures persist and Japan's policy path remains open-ended. The yen softened and yields declined as investors adjusted expectations for the next Bank of Japan move. China. Stimulus in waiting as PMI slides. Mainland China had a shortened trading week with modest stock declines. But the real story is in the data, both manufacturing and services. PMI slipped, signaling pressure from the recent US tariff hike. Beijing struck a more diplomatic tone, hinting at a willingness to resume trade talks and exempting some US goods from tariffs. Still, the slowdown is evident and the Politburo's pledge to roll out targeted stimulus in response underscores the pressure. With a 5% growth target looking ambitious, we may see stronger fiscal tools deployed if the trade chill persists. Our take. This week offered some breathing room. Earnings helped, trade rhetoric softened, and markets responded. But don't be fooled. Underlying weakness in growth, labor, and inflation expectations are still front and center. At G2 Finance Tech, we stay cautiously constructive. Stay nimble, stay diversified, and don't chase the noise because the next wave of volatility might not be far behind. That is it from us this week. I am Shruti. Thanks for watching the G2 Weekly Market Update. We'll be back next Sunday with another pulse check on global markets. Until then, stay informed and stay ahead. Thank you.